Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Thursday, November 8th, and I just want to say first things first that I'm getting pretty close to being bullish on this market again, and the reason why is we are coming down to what appears to be, or what should be, a really good support level. It's an emphasis on 1360, but it could be anywhere from 1356 to, let's see, 1372, and the reason why is we have a huge lump of volume there, the most in the last year, and I think that's worth noting, and just looking for price to bounce at those levels. If I get, nope, doesn't matter. So overall, I think we're ready, or we're setting up for an oversold bounce in the market. Let me just pull up the hourly just to look at it. Now this looks bad, and there is no ifs, ands, or buts about it, but bad should turn to good or opportunistic when we get a little bit lower. Closing this gap down here around 1361, that would be very sufficient. That would look, that's just another catalyst to see some type of bounce in these markets. So overall, I'm getting ready to start buying, and I think that's good news. I think it's leading to some really good opportunity. NASDAQ, still looking bad, but that's because you have to look at Apple. And Apple's just a falling knife, and there's no doubt about it. However, I did pick up some Apple today. Down around the close, a little lower from current levels, 537.12 is the level. And the reason why is because we are so oversold, and I'm not saying that it can't go lower, but we're so oversold so short term. This is still Apple. It's still a company with, don't get me wrong, over 100 billion in cash on the balance sheet. Stuff like that matters, and I think that you need to be paying attention to stuff like that. There are opportunities. Panic, which basically is what's going on short term, is going on in Apple, and you're going to see some type of snapback rally. And I don't know if it will be for 20 points, 30 points, 40 points, but it's going to happen, and it's probably going to be a pretty good move. So as Apple gets closer to these lows here, basically your line in the sand is around 520 or so. And given that we are pretty close to those levels, within a couple percentage points, I'm willing to start nibbling on Apple again. So I've been saying back in August, September, that there's too much enthusiasm, we need to see a pullback. We got that pullback. I didn't think it was going to be this severe, but now it is. Now we're getting an opportunity to really get involved in something like this name for a real decent bounce. So just kind of take that in with the S&P, that we're about % away from the S&P bouncing, and we kind of go from there. The volatility index, I think it's most appropriate for me to pull up. Okay, I'm looking at let's see, there you go. I'm looking at some hourly charts on the VIX, and just see the 50% retracements here. This looks pretty bullish for the VIX. I'm kind of seeing some type of consolidation pattern here. Maybe a recipe for a breakout to the upside. However, around 21 or so should be your first ceiling, and if that's the case, then you have a decent upside move in volatility. But right here, right now, we are in consolidation. We have to wait to see it break out. So if you're going for a short-term move, yes, it looks like it's going to be bad. Looks like the market's going to take another leg down, but we're in a position to start looking to buy the market. Ever since I participated some in selling the Qs on this Friday, Employment Friday from October. This has been on a sell since, and we tried to bounce at the bottom of the range in the end of October, early November. Couldn't do it, and elections came out, and you saw the result from that. So overall, the market, again, probably have a little more downside. down probably 1% or so before you start to see any type of bounce in the market. So the bounce should be up towards 1400 on the S&P, but of course there's no guarantee there. But this looks like a market that's probably going to give us a meaningful bounce. So go ahead and be a part of it. I did buy some Altria today. Right now, I'm underwater. 31.50 was my buy price. The reason why I bought it was, I think it was on this bar here. Yeah, this bar early in the morning. Now it finished down, but we saw a nice tail, so I'm just defining my risk with the tail, and we'll see if we get some type of move to the upside. So far, not looking so good, but I'm going to stick with the trade. If I get stopped out, I get stopped out. This is a name that yields probably close to 6% now, so it's probably worth keeping an eye on. All right, the last thing I want to cover before I'm not going to keep you much longer. Gold. All right, on the 2nd, I think it was the weekend update, I said gold doesn't look good at all. This is not something that you want to be here short term. Well, sure enough, I was completely wrong. I guess the elections had something to do with that, the whole Greece thing. But what I really want to do is zoom out a little longer, and let me go to a 3-year, 3-day chart. And what I see here that's going on is a pretty bullish formation here. I see our lows or our highs and a breakout, and I see our lows, pretty much flat lows, and then higher lows, a breakout. And basically what I see now is a test of what was resistance, or basically the bottom of this, or excuse me, the top of this high volume here. I'm looking at the horizontal volume bars. We're getting a bounce right off those levels, right off the 200-day moving average. You know, there's no doubt about it that the top of the range is defined, and it's around 1780. But this looks pretty good, and I just see that it continues to work when the market's not. So, you know, as much as I say that I admit I was wrong during the weekend, this looks good now, and as long as it keeps going up, I think this is something that you want to be long. So this is why you stay in, names like gold. Another name, silver. This has had a point of control shift, and what you're seeing now is price stabilize at the 200-day moving average. You have the point of control now down at 31.80. It was up at 33.90 or so, let's call it. So this looks like a potential bullish formation also, and I think it's something that you want to be a part of. Now, back in, let's get the day. Back in, looks like August, I was saying we had a 2-year buy for silver. Well, now we reached the top of that buy zone, or that range, I should say, and we saw a sell-off. Is this a consolidation before the next move higher? It could be. On a 1-year chart, it looks like it. But on a 2-year chart, I'm still seeing some potential resistance around this 33.50 to 35 level. So just keep an eye on that. And I think the name that you do want to be long over the 2 is gold. Crude oil, last one. We're down at the bottom of the range where it's been right to be a buyer. Just leave it at that. If you get an opportunity to the long side, take it. If you get an opportunity to the short side, you could probably take it also. Just make sure that your risk is defined, and you're just kind of evaluating as you go. So overall, market looks like it could have a little more of a pullback, about 1% or so, and from there you look for your potential buy. If you do want to look at a 2-year potential buy, it would be around 13.16 or so, which gives us a little more room to the downside. But right here, we're looking for value area high for the last 2 years, and for the last year, we are looking for the point of control for the year, a bounce off the S&P. These are usually, off the S&P, these are usually fantastic levels to go off of, so just keep that in mind. So anyways, I hope this helps. Take care, have a wonderful night, and I'll talk to you over the weekend.